How inflation is affecting home prices, what buyers and sellers need to know right now.
Let's find out. And we are back. In our last update, we spoke about the shortage of homes for sale. Even with a limited inventory, Queens housing market is showing little signs of slowing down. Looking at the most current data from OneKey MLS for residential condos and co-ops, in the month of February, there was a total of about 4,700 listings on the market. So there was 1,477 new listings on the market, which was about 14% less from the same time last year. There was 975 new contracts pending, which was about 19% higher than the same time last year. And there was 839 new closings, which was up about 22% from the same time last year.
On average, these homes were on the market for about 85 days before closing. So for single family and multifamily, the average list price was about $908,000. That's about 6% increase from just a year ago. And the average sold price for single and multi was about $886,000. That's about 8% increase from a year ago. For condos and co-ops, the average list price was $365,000. That's about 1.7% increase from a year ago. And the average sold price for condos and co-ops was about $350,000. That's about 3% increase from just a year ago.
So like we spoke about in the last update, there's a limited supply of homes for sale. Homes are selling faster and for more money, and home price appreciation is still rising.
So the bottom line is we are heading into relatively a strong spring market, especially from the buyers. There's a lot of urgency. As you know, the recent news of the interest rates increasing, we're gonna see a lot of buyers actually flooding the market and really try to take advantage, of the opportunity before the interest rate is gonna go even higher. Inflation, it's a red hot topic. It is affecting everybody. The inflation today is about 7.5%. This is the highest since 1982. The gas prices went from like $3.25 to almost $5 per gallon in the city. Okay, the grocery prices they've gone up as well. Of course, the electricity, it almost doubled in the past few months, and it's really gonna eat away from the savings you have. And not saying that the money is gonna disappear from your bank, but the buying power of the money which you have is gonna decrease because now everything is gonna be just way more expensive. The rents gonna be affected by the inflation as well. So as a matter of fact, we're going to see some record increases in rents and record increases in prices as well. So we can really be surprised that the real estate prices, they're going to keep on climbing higher and higher. What do you see, how that's going to really affect the pricing for most people?
Yeah, man, good question. So for most people, they're going to have to lower their budget because not only are home prices rising, but interest rates are rising at the same rate. And, everybody goes to work, they make their salaries. Mm-hmm. So how often do they get, raises, right? Once a year. Depends on how you do at work. What they're getting paid is not rising at the same rate as home prices and interest rates. So it's going to be a lot tougher for buyers to buy, what they're looking for. So a lot of them are going to have to lower their budgets. They're not going to get exactly what they're, wanting to get, their dream home. The first one you just want to get in there, and start building.
So maybe you have to probably drop down the expectation, right? Maybe you have to move into the suburbs a little bit. Maybe you have to buy a home which is maybe a little bit smaller. Maybe a home which, needs a little work for you guys considering buying, right? Maybe you're renting right now because the home prices, they're going to go up. The rents, they're going to go up as well, right? So the good thing when you lock in the rate and you get it usually fixed for about 30 years fixed, your monthly payment for that mortgage is going to stay the same. It's not going to go up with the inflation, right?
Exactly.
But the rent is going to go up with the inflation. So actually it's going to be a lot more affordable for you to really pay for the mortgage instead of paying for the rent. If the real estate is going to appreciate and you get in the game now and it's going to appreciate, in the next 10 years, you're going to be wealthy as well, right? It's just about really getting into the housing right now as soon as possible. You work with a lot of buyers. And you don't have to submit 5 offers to get it accepted. You usually get it on the second one, right? So what do you see with Josh?
Homes are expensive now. That's why it's very important to sit down with a professional so you can see what it costs to buy a home compared to renting. So that's very important to go over the numbers, right? Now, first thing we do is we dive deep into the research. So we check, the list of sold prices. We see what homes are selling for. Now we're going to dive deep into your budget, specific budget. So we're going to run all your numbers. We'll see what's more affordable for you. Is it more affordable to have a fixed rate on a monthly payment, or is it more affordable to rent? And last, what we're going to do, we're going to check out the competition. We're going to see the affordability of your competition, because it's very important to see what others are, paying for in the neighborhoods that you're looking at. All those three together, we're going to get a good idea of if it's the right time for you to buy.
It always starts with really educating customer first, right? Really bringing them up to speed on what's going on, what options they have, and then maybe suggesting them what it would be a good option for them and letting them choose. Some buyers shouldn't be looking at homes within their price point, because the asking price today in today's market is completely irrelevant. It's really the sold price. So if the budget is, $850, and we know the home is going to go up, $60,000 on the average, right? We should be really looking at homes between $750 to $800, no more than that, because you're not going to be able to compete in a bidding war, right? So that's one. Really go deeper into the comps. Of course, we can't give you advice on financial planning whatsoever, but we can review your budget with you. We can help to come up maybe with a simple spreadsheet where you would actually know how much I can afford to put towards the housing. So if you figure the number out, we got to figure it out at what price point now you have to be. I think everybody's focusing on what my home is going to be worth next year, or the following year. Am I overpaying? Am I getting a deal? Quite frankly, you're always getting a deal when you get it. They say don't wait to buy. They say buy and then wait. Now for the sellers, what I see, because we have a low inventory of homes, a lot of sellers don't want to put a home on the market because they're really asking a question. Okay, if I sell my place, where am I gonna go? What am I gonna buy? Right? I bought this place a few years ago. I appreciate tremendously, thanks God. But my interest rate's only 2.5%.
Yeah.
Now, if I'm gonna buy the next home, now the home is more expensive. My interest is gonna be more expensive. That means my monthly payment is gonna be more expensive. Yes, it's gonna cost you more money. But guess what? It's going to cost you more money to wait. We just had one transaction recently, which we actually closing next week. We helped Kashif actually sold his home and buying the next one. We put a home on the market. We got the buyer. We knew the buyer, that the buyer got a commitment letter, right? We know they're going to get the financing, the home appraised. Now when we get that green light, we pull the trigger on the purchase. We close on the home 2 months before the one which he's selling. So he's already going to be moving into the new home this week, and he's going to be closing on the next place the following week.
Start thinking of an exit plan. You should sit down with a professional, go over the exit plan together, because you don't know. You might be missing out on money.
Now, if it really makes sense, we're maybe looking to downsize, or maybe looking for a bigger place, or maybe you're looking to relocate, right? If you can afford it and it's still within your budget, just do it.
Yeah.
Because you know what, there's more important things than just money, guys. Yeah. And I think if you're moving because of better schools, you're moving because you're about to retire now, you're tired of the snow, you want to be on the beach somewhere, why would you delay that? It's really not going to make a big difference if it's costing you a few $100s more a month, if it's within your budget.
Yeah, don't try to time the market. If it fits your lifestyle, fits your finances, your budget, then make the move, then sell your house, or then buy a house. But don't try to time the market to try to get a good deal or try to sell your home for a lot more money, because, it's not going to work.
There are solutions, guys. If you have troubles really selling your place because you don't know where to go, reach out to us. We would love to give you more information. What are some of the top tactics? Yeah. How you can really, I think, take advantage of the market.
So we hope you found this update helpful. If you have any questions, drop it in the comments below. And don't forget to like, share, and subscribe. We'll catch you guys on the next one.